How much taxes single people will pay in retirement. All right, so you might, oh, wait. Gotta get the trumpet. That's the PVC clarion call. When you got the PVC clarion call, it's a half inch. When you got the 3/4 of an inch, when you got the PVC clarion call means you got to stop what you're doing and pay attention. Eyes up front, your old buddy Josh. All right. So on Saturday, I think it was Saturday. Today's Monday. So Saturday, I did a video where he took the median income for single people at a certain age. I think it's 55 or something like that, 55 to 64. We gave them a 20% kicker because the people who watch this channel are just a better class of people, just a better class. We're sophisticates, you know what I'm saying? And then we took out, so let's just say $70,000 was their gross income. Then we took out federal taxes, we took out state taxes, and we took out FICA. We did not take anything for 401k contributions. And what they were doing is they were bringing home about $58,000 a year. All right. Now remember, Social Security, you pay taxes on the first penny you receive. You pay tax on your gross income in Social Security. You don't pay tax on the net after stated federal income taxes. You pay tax on the first amount. Just keep that in mind. Anyway, so at the end of the day, their $70,000 salary, whatever it was, I can't remember, netted them $58,000. So what we're trying to do is say, okay, on $58,000, we're going to figure out how much Social Security they were going to get first and foremost, and then we're going to figure out how much money do we need to give us $58,000 on top of Social Security. So what we did is we crunched the numbers, and Social Security was going to give us about 55% of our $58,000 net. I hope that makes sense. All right, so again, they made roughly $75,000 gross after taxes. They're walking home with $58,000. Then we took the Social Security benefit they're going to get on $75,000, and that we figured out that Social Security benefit was 55% of this total net income. Does that make sense? Now, the reason I got here gross, because a couple of people commented like, but you're comparing apples to oranges. You're not including income tax on this. And I frankly didn't think I had to, but okay, we're going to do that here today because you'll be shocked. It's just not that big of a deal. All right. So in this case, we got 58,000 gross. That's what we're striving for, 58,000 gross, of which Social Security covers 55% of that, all right? So of our 58,000 we need, Social Security comes up with 31,900, which means we need 26,100 from something else. In this case, just to show you the worst case scenario, we're going to take it from an IRA. But this is why I'm always telling you, do not do your tax defers anymore. We want this into a Roth or a brokerage account. But it's not going to be a big deal. Either way, so they got $26,000 from a pre-tax IRA. How did they get that when they weren't contributing? I don't know, but we're just going to run with it to show the worst case scenario. Because remember, in that video I did, we weren't even putting any money into a 401k. We weren't, all right? So you got $31,900 from Social Security. They need $26,100 from their IRA. So 55% of their $58,000 is coming from Social Security. The rest will come from their IRA. All right, so now we got to figure out a provisional income. The provisional income is how much of our Social Security is subject to taxation. So we take half of this amount, as half of our Social Security amount, which is $15,950. We add to our IRA distributions, which is $26,100. So our provisional income here is $42,050. All right, $42,050. Now what we do is we say, okay, we come over here. Of our provisional income, because we're single, the first $25,000 is not taxed of that provisional income. The next $9,000 is taxed at a 50% tax rate. And again, when I say tax, this isn't the tax you pay, but in terms of figuring out how much of Social Security will be subject to tax. So the next $9,000, $4,500 is subject to taxation. And then anything above $34,000, 85% of that is subject to taxation. So we got, of our total Social Security, $31,900, $11,342 is subject to taxation. Everybody seeing that? Again, I'm kind of flying through this. I've done 1,000 videos on this, but just remember, all we're trying to figure out first and foremost is we're trying to get our provisional income, which will tell us how much of our Social Security is subject to taxation. To get our provisional income, we take half of our Social Security benefit and add it to any other income that we have. In this case, we got $26,100 of other income, all right? Because it's an IRA distribution. So our provisional income is $42,050. The first $25,000 is not subject to any taxation. The next 9,000, half of that is subject to taxation, and anything above 34,000 for single people, 6842 is subject to taxation, which gives us 11,342 of our total Social Security is subject to taxation. So roughly a third of our Social Security benefit is subject to taxation. Now we come up here, we take our 11,342, which again is our taxable portion of Social Security. We take the 26,100, which is our IRA distribution, which is fully taxable, and we take what? 37,442 as our adjusted gross income. 37,442. Now we get, because we're over 65, we get 14,700 of standard deduction. All right, 14,700 minus the 37,442 minus 14,700. Our gross income, I should say, our taxable income in this case, our TI taxable income is $22,742. Again, we have $58,000 of gross income. Our taxable income is only $22,742, man. That's pretty good. Why? Because only a third of our Social Security is subject to taxation. And really, when you factor in this, 12,000 of that is subject to taxation because of standard deductions. So we look at the tax bracket. For a single tax bracket in 2023, the first $11,000 of taxable income is subject to taxation at 10%. $11,000 at 10% is $1,100 of taxes. The next amount from 11 to 45, that's subject to 12% tax rate. Well, we have 11,000 here because again, our AGI our taxable income is 22,000. The first $11,000 is taxed at a 10% bracket. The next $11,742 is taxed at a 12% bracket. That's $1,409 plus $1,100. Our total taxes are $2,500. $2,500 on $58,000. Let's see if I can reach my trusty calculator. Yes, I can. Yes, I can. So we take $2,500, 09 divided by 58,000. And we're in a 4.3% effective tax rate. And if you live in Georgia, most states are not going to pay any income tax on this. Look at that. Now, we can easily show you if this money came from a Roth or we'll just do it real quick. We're going to have this money coming from a brokerage account. We'll just say instead of 26,100, watch this, we're going to have $5,000 of capital gains, just for giggles here. Why? Because we know that capital gains we know that if it's coming from a brokerage account, and we're not going to do a Roth. Well, let's just do a Roth for heaven's sake. I'm just going to show you. So we know for a fact we have five. We'll just do it from a Roth. So there's 0 distributions here, nothing, because it comes from a Roth. I mean, we're taking a distribution, but because it's from a Roth, it doesn't show up on the 1040. It's completely silent cow, 0. So our total provisional income is $15,950. Well, the first $25,000 of provisional income is not subject to taxation. So our provisional income is 0 here. Our taxable Social Security is a big fat goose egg. We take this big fat goose egg, we put it up here, 0. And we have no IRA distributions because it comes from a Roth, so we have no taxable income. We don't owe AGI, no taxable income. We pay nothing. You can make that fit. Look, so you got $15,950 as a provisional income. The first $25,000 is free and clear of any taxation. So you can make this $10,000. $10,000 from an IRA. $10,000. Look at that. Now we got $25,000. We got $950 in this bracket, which is going to be what, $475. $475 of taxable Social Security. We got $10,000 IRA distribution. So I hope this makes sense. So we got $475 right here, $475 plus a $10,000 IRA distribution because we got $10,000 from an IRA. The first $11,000 of our AGI is we get right there. The first standard deduction. We got $14,700 standard deduction. Our standard deduction is greater than this amount right here. We pay no tax. That's why you pay your taxes now while you can afford it, man. I tell you, when you're in retirement, taxes are a big hit. Pay it now. But Josh, I don't care. I don't care. The reality is if you have less taxes in retirement, you have less of a liability. And I hope this makes sense. Love to hear your comments. We'll see ya.